Hello, welcome to another episode of Forex for Beginners. So, as we look at in the previous video, we learned about Forex and other content as outlined in part 1. So, today's video is part 3 that will continue from where we stopped in part 2. So, today we'll focus on who a Forex broker is. So, without wasting much time, let's dive straight into it. Now, who is a forex broker? A forex broker is a company or an individual that enables traders to buy and sell currencies. So when they ask or when someone asks you what is forex broker, it simply means a company or individual that enable a trader to buy and sell currencies in the forex market. So they serve as intermediary between you and the financial market or the forex market. As individual, you can't just stand up and get access to the market. So these brokers serve as an intermediary between you and the financial market. Forex broker provides the necessary infrastructures such as trading platform, charting tools, and access to liquidity providers to facilitate forex trading. So as I said earlier, they provide you the necessary tools and platforms that you need to trade the financial market. They also provide you with access to liquidity providers. The small capital you have isn't enough to trade the financial market. So they, they provide you with access to liquidity providers that you can leverage on their liquidity to trade the financial market. Now, let's look at some major key rules and functions of a forex broker. Execution of trades. So anytime you click on buy or sell in the forex market, the forex broker or the broker is the one that will execute your trade in the forex market for you. So at times we use instant execution or market execution pending orders. Is this broker that will execute the trade for you as you click your buy or sell button. They also provide trading platform, as I said earlier. They provide you with platform that you can trade the financial market without any difficulties. Now, they provide market access and liquidity. So as I said, we as individual with our little money can get access to the market direct. So what these brokers do is that they provide us access to the market and liquidity providers. Liquidity providers in the sense that those big financial institutions that trade in the forex market. They also provide account management, meaning that they provide you with the necessary platforms that you can deposit money into your forex account that will enable you to trade the forex market. Education, they also provide educational resources. As a forex broker or forex brokers provide educational resources in the sense that at times they host webinars, workshop, training, and they provide reading materials to their customers to enable them understand, and they also provide economic indicators or factors that may probably influence the market. They also provide customer support. So you all know that every institution there's a customer support service. So these forex brokers make sure that their customers are well catered for, or they are provided with the necessary tools and information needed to trade the financial market. Now let's look at some examples of forex brokers. We have Xness, which is the one I personally use. I use Xness, one of the world leading brokers. Wanda is also one of the great brokers. We have forex.com. We have CMC Markets. We have Hot Forex, FXCM, Octa FS, and the rest. We have so many forex brokers worldwide. These are just few that are listed. So what you want to do is, before you select a broker, make sure that you have done a background research about the broker, because there are other brokers out there that are not concretely or strongly in the market. They just take people's money and all of a sudden you will not see them again. So you'd have to make thorough research about a broker that you want to take or that you want to register with before you deposit money into your accounts. It is very, very important. So there's some brokers you can deposit money into the account, you trade. When it's time for withdrawal, then they find it difficult to send you your money or send you your withdrawal. So be very mindful of the broker that you use. For me personally, I use Xness. Xness. Now, let's look at the trading section and trading times that we have. So first, let's look at the trading sections. We have the first one to be Sydney section. We have the Tokyo section. We have the London section. We have the Frankfurt section and the New York section. These are the major sections that we have, but the focus at times we do not consider the Sydney and the Frankfurt section. We combine the Sydney and the Frankfurt to be Tokyo section, and we have the London section, one of the major, and the Frankfurt and New York sessions all combined. So let's look at the trading time for these sections, meaning the times that these sections opens and close. These are individual market sections. These are individual market sections. So let's look at the time that they open and the time that they close. Now, when you take the Sydney session, it opens at 9 p.m. GMT to 6 a.m. GMT. Then they open at 9 p.m. GMT and close at 6 a.m. GMT. The same applies to Tokyo. They open at 11 p.m. GMT to 8 a.m. GMT. London session open 7 a.m. GMT to 4 p.m. GMT. Then the Frankfurt session, it open at 8 a.m. GMT to 5 p.m. GMT. Now, New York section open at 1 p.m. GMT to 10 p.m. GMT. One thing that you have to note about this time is that they are on GMT. So you have to check and convert these times to your country time. You have to check the time and convert them into your country time so that it will enable you to know the time that this market opens. Each market determine its liquidity or momentum or volatility in the forex market. Some like London sessions and the New York sessions are very, very volatile. The momentum in such markets are very high. So trading in those sections are very lucrative, or you will be able to make quick peep in the London session and New York session as compared to Tokyo and the Sydney sessions. Now let's look at some terminologies used in the forex market. As we know, every food or every industry, there are certain terminologies that they use in those industries. So in the forex market or in the forex industry, there are certain terminologies that we have to look out for. Now let's look at them. First one, we have to go long. When someone tells you that I am going long on this currency pair or I am going long in this market, meaning that the person is buying, meaning to buy, or if they ask you to go long, meaning to buy. Now, if they ask you to go short, means to sell. To go short means to go to sell. Now, we have a bullish market, means market is going upward or in upward direction. And we have the bearish market, means market is going downward. We have the bulls, which means buyers market or bulls market. It's the same thing. Bulls means buyers, and the bears means sellers. We also have ranging market. It means that the market is moving sideways. It is not moving upward or downward. It is ranging in sideways. We have trending market. It means the market is moving upward or downward, meaning it's creating higher highs and higher lows, or it's moving in an upward direction or in a downward direction. We'll be looking at this ranging market and trending market in technical analysis when we get there. Now, we also have NFP news. This NFP means non-farm payroll. It is a very important news event in the US which affects US United States dollar currency pairs. Very, very important. There are so many other terminologies such as bid, ask price, spread, leverage, so many terms, but these are just some few major ones that I've listed for your understanding. Now, thank you very much for watching this video. Please do not forget to subscribe to the channel. See you in the next part.